IMF today has warned that such policies will dent global growth. Can you elaborate more on the near-term economic impact of these policies and over a longer time horizon? How concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Let's see.
So that happened this week to U.S. Treasury head Janet Yellen. Quick snippet from my interview 2 days ago, last Wednesday, October 23rd, with Dale Pinkert of FOREX Analytix. Full link in the show notes and on my Twitter feed at James Henry And.
I'm going to bring James Anderson in, who said nothing was going to happen in the precious metals in the summer and that things would begin to get active again in the fall in September. And here's a guy who's been in the physical business for a long time that saw the seasonal trend being dull in the summer and then action picking up. Welcome back and great call, James. How are you?
Hey, Dale. I'm very good. It's good to be back. Good to hear your voice.
Yeah, good to hear yours too. So low profit taking in metals. On this recent run, has the public participated? Have your phones been busier during this run? You're getting guys like Paul Tudor Jones, and I think Bank of America came out a few days ago and said gold is the last safe haven because of the debt that takes treasuries out of it. What are you seeing in the market here, buddy?
So I think it's validation for all the people who've been stacking for so long based on the fundamental factors, pretty much since the GFC 2008. That's basically been a trend underlying in the United States of America and around the world, to be honest. But in silver, especially in the United States, it's validation that that the thesis is going to start playing out, and it's starting to play out in real time. What I see is, I think people who've been buying, at lower spot prices are probably pulling back. Hopefully they've got their positions now, at least the ones who are savvy and understand why they did it in the first place. And new entrants, I don't think really going to come in until you have a situation where we go beyond 3,000 gold. It goes beyond, pulls back, and then goes beyond again. And then likely the same with silver. You got to get past 50 and it has to become support, and that'll ultimately bring in the Main Street and the institution side. But from here to there, there's some excitement to come, a lot of volatility, probably some type of deflationary nightmare in between. But yeah,
China, deflationary nightmare. So, okay, I want to delve into that. So, deflationary nightmare. This move in the dollar has surprised me. It's had no impact on the metals until today. That could be a sign.
Yeah, you're right.
Deflation. So we've had an everything bubble. Could we have an everything deflation?
Yeah, it wouldn't surprise me at some point, because you have so many banks around the world that are insolvent on a mark-to-market basis, and they just haven't admitted it yet, And so what's the chain reaction that kind of sets that off and sets off some type of coordinated event around the world? And I expect it. There's the second part of the global financial crisis hasn't come yet. It's not arrived yet. It has to, in order to clear the system, in order to structurally reset and turn the page from the post-World War II debt super cycle into a new era. And that new era is probably more of a multi-currency regime, the US dollar not being extremely dominant like it has been for the last 20, 30, 40, 50 years. So yeah, it's still got a lot of ways to go. And these are massive tectonic plates that are moving. But we're looking at something that's going to take 5-10 years to run out and play out. And you look at the fundamentals of the United States and the Western world and how indebted they are with pensions and unfunded liabilities. Inflation, like Paul Tudor Jones said yesterday on CNBC on Squawk Box. That's essentially generally how governments historically get out of this mess. They don't flat out default. They just really, really debase the currencies. And that's where we are.
Just real quickly, every 100 basis points, given where our debt to GDP right now, every 100 basis points is worth about $90 billion a year to the deficit. $90 billion. So yes, if we're trying to stabilize debt to GDP, we want to run the most dovish monetary policy that we can without letting inflation become too much of a tax on the citizenry. So yes, all roads lead to inflation. That's historically the way every civilization has gotten out, is they've inflated away their debts.
Did you get anything out of the BRICS meeting that happened the other day?
Probably the most important thing to note about the recent BRICS meeting this week is the further move of Russia and other BRICS players aspiring to build a supposedly more fair and honest price discovery market for their precious metals interests. Russia being a massive player in palladium and gold globally speaking. Silver popped this week with spot nearing 35 an ounce. More on this week's silver and gold price action later. First, some legit silver coverage from CNBC India.
It's a season of all-time highs, really, when you look at precious metals. So gold is doing that, but silver is doing even better. So with 3% of gains in the overnight markets, we've seen $35 an ounce come in for this one. Slight profit taking, as is always the case. When you see that huge run-up come in, there will be some hands which will go in for some profit taking there. But even with these gains, the kind of levels that we are working with right now, the gold prices are trading at a 12-year highs in the international markets. And the Indian prices have seen 1 lakh rupees in the New York session yesterday, which is an all-time high for the prices. So even as we are looking at 99,700 odd in the futures market, in the spot market, you will add GST to this, you will add making charges to it. So it's basically is a lakh rupee plus when it comes to the physical markets there. When you look at the prices on how they've done in the recent past, well, we have seen prices gain up by 9% in last week. 46% now in this year and 51% in the matter of last 12 months. So that is what silver has done for you in your portfolio there. Well, the reason that silver prices are surging is one, there is strong investment demand that you have seen come in for this one. And then apart from that, the record high gold prices, safe haven demand that silver also caters to in some sense have been supportive. There is also a record offtake that we've seen come in from the photovoltaic as an industry. And then it also has been about the mine output, which has continued to be stagnant, supporting prices. I want to talk about the world global deficit, and that is a market which continues to support the prices. So this is going to be a fourth straight year that the global silver markets are into a deficit. Last year was almost at around 184 million ounces of a deficit. This year is even higher at 215 million ounces. So we continue to look at those kind of numbers there. The street also is looking at the industrial demand, which is hitting record highs. This is also going to be a fourth straight year that the industrial demand for silver is going to hit a record highs. The markets do believe that going forward from here, it is going to be further highs that you can see in case of silver. A Citi report that came in yesterday suggests that next 6 to 12 months, you could be looking at silver prices hitting $40 an ounce. There also are reports from UBS, JPM, Goldman Sachs, everybody saying that it is going to be anywhere between $38 to $42 on the higher side that you could see for silver prices in the next year.
This is the yearly fiat US dollar gold and silver price chart, full fiat currency era, beginning in 1970 until present 2024. Silver is still obviously lagging gold, but unlikely for much longer. India is already foreshadowing this when we see their same gold and silver annual price charts for this full fiat currency era. Now, let's use this same data in a percentage gain respecting logarithmic format. This is the gold, silver, fiat, rupee price chart in logarithmic format. India has declared massive renewable energy target goals for 2030 and 2032 respectively. A large swath of these projects will be silver-heavy used solar panels and battery technologies. India's Ministry of New and Renewable Energy has declared silver a critical resource. So at least some nations are telling their citizens the truth regarding silver and its importance in our future. All trends point to more silver and solar panels to come globally. Already about a third of silver's growing industrial demand is for solar panels. Expect that to keep growing as time goes on. As alleged poor man's silver buyers go with silver over gold, especially in India, expect to continue to see growing trends like this, for instance, where people are buying silver jewelry plated by gold. Indian headlines such as these should also drive FOMO locally by investors, seeing silver outperform gold. Fundamentally, record silver deficits where global silver demand outstrips annual supplies are likely to continue for time to come, at least up and until silver spot price starts climbing walls. Meantime, expect to continue to see India go heavy silver importation in the years coming as they emerge and further develop their renewable energy grids further. So the bottom line here, silver still has a lot of catching up to do relative to gold. But stick around. On the other side of this break, we are going to discuss gold specifically, silver, and get a bit more from billionaire hedge fund trader Paul Tudor Jones's comments from this week on CNBC. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a Monster Box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot silver and gold markets were a mixed bag this week, with silver nominal price levels not seen since late 2012. The spot silver price closed just under 34 an ounce, and the spot gold price closed at a still strong just under 2,750 an ounce bid. The spot gold silver ratio did break 80 intra-week, and it has me thinking a revisit this silver run towards lower 70s, even 60s is possible not very long from now. Even with relative higher interest rates and the US dollar strengthening of late relative to its major fiat peers, the fundamentals underlying gold's future re-ratings higher in real value terms continues to look strong, especially comparing now in 2024 to Pipsqueak 2011 and the old 1980 bull that nearly crushed the entire system. The Western world, specifically the USA, has promised more than she can deliver, and one way or another screaming gold values higher will account for that present and future fact. Here's further with Paul Tudor Jones this week, basically telling you and me our fiat currency of issuance is heading towards a historically predictable inflationary quagmire to come.
Let's talk about taxes, though.
Okay.
Because that's how the money is going to get raised,
Correct.
one way or the other.
Correct.
I think we have a screen, if we could, that puts up a little bit of a menu here.
Yes.
Of, I don't know if it's options. Actually, they may not be options
there
at all.
there are plenty of options. There are plenty of
but
options.
there's not many ways to get where you need to go unless you start to do some of these things.
Correct.
Maybe. So the question is, of what's on the screen, you can let the tax cuts expire. That gets you
can I just say this?
Yep.
You have to let the tax cuts expire.
You have to.
You have to let those expire. That's 390 billion. We're going to have, again, we're gonna be broke really quickly unless we get serious about dealing with our spending issues, and unless we can either. I don't know if we'll be able to cut spending that much. 60% of our spending are transfer payments.
But if you think we're going broke, and you think Trump is going to be the president, he's not going to let those tax cuts expire if he can avoid it.
The thing
he does not want the corporate tax rate to go to 25%, as you're suggesting it'll have to. He's suggesting it should go to 15%.
I'm saying that just to get us to the point where we stabilize debt to GDP at where it is right now, here's what you need to do. You need to let the Trump tax cuts expire. That's $390 billion. You need to raise the payroll tax on every single working person, 1%. That's another big slug. You need to...
What do you think that does to jobs?
We're clearly going to have a period of contraction, which hopefully, that's why I was going to say, it's going to be really important for the Fed to be able to offset the fiscal contraction area that's going to come.
Then you want to increase the individual tax rate all the way to the top rate of close to 50%.
No, hold it.
Yep.
I don't want to do any of this stuff. What I'm telling you is that we've got to be serious about where we are fiscally. And so I'm giving you, there's a whole set of options, right? We could go in and cut 25% of the federal workforce. Some people may do that. There's a website where you can go look and play with all the options. You can raise the capital gains rate from 21 to 28%. That only gets you $10 billion a year. It actually doesn't get you what you need. So I'm simply showing some of the things that you can do. Yes, you'd have to raise the tax rate on the top, I think probably everyone over 200 grand, probably have to raise that to 49.5%. If you do all these things, all these things, raise the Social Security from 65 to 70. If you do all these things, means test, Medicare, if you do all these things, all you do is you get to a primary balance. What that means is you stabilize debt to GDP. You're still actually increasing your debt.
Right.
You're still actually increasing it because it excludes the interest costs, which, oh, by the way, the interest bill this year is larger than every single line item except Social Security. It's larger than defense spending.
Given all of the things you're saying, are you off buying gold and Bitcoin and
I think all roads lead to inflation. We're going to end up, but does all roads lead to inflation, therefore gold is a good investment? Is Bitcoin a good investment to you? I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out and you have a small tax on the consumer and you run interest rates and nominal growth rate, interest rates below inflation and nominal growth above inflation. And that's how you reduce your debt to GDP. So you're going to have the Fed they should be easy. They should be
easy. You want them to cut.
So just real quickly, every 100 basis points, given where our debt to GDP right now, every 100 basis points is worth about $90 billion a year to the deficit. $90 billion. So yes, if we're trying to stabilize debt to GDP, we want to run the most dovish monetary policy that we can without letting inflation become too much of a tax on the citizenry. So yes, all roads lead to inflation. That's historically the way every civilization has gotten out, is they've inflated away their debts.
Gold and silver are still relatively cheap, and that is going to be all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.